Hello traders, and welcome to another introductory trading lesson. I'm Darren Oglesby, and today I want to talk to you about a controversial topic within the trading industry. Now, this topic, it stems around this question. As a trader, what are you going to base your decisions on? Now, in trading, there's two primary methodologies, or two schools of thought. On one side, you have fundamental analysis, and on the other side, you have technical analysis. So let's go ahead and take a look at these two. First, let's look at fundamental analysis. Now, traders that use fundamental analysis identify trade opportunities by studying open source information. Now, what I mean by that is they look at news events, they look at the political landscape, they study major economic developments, interest rate adjustments, unemployment figures, consumer sentiment, monetary policy, you name it, the list goes on. And basically, they attempt to recognize correlations between external events and market movements. They're trying to figure out why price action is moving. They're trying to figure out what is causing the markets to fluctuate. Now, fundamental analysis can provide a good big picture perspective. For instance, if the government decides to pump $3 trillion into the economy, well, then it's reasonable to assume that the value of that currency is going to decline. However, developing valuable trading opportunities from that information is very difficult. Now, it's not to say that it can't be done, but people who are successful using fundamental analysis, institutions, big firms, they rely on teams of researchers and analysts, many of which are MIT graduates or they hold a PhD in economics. These firms will pay tens of thousands of dollars every month to obtain information early so they can make trade calls with it. Now, obviously, as an independent trader, you don't have access to those kinds of resources. So if you're trying to trade based on fundamentals, then that means that you're relying on open source information. And, the major challenge with this approach is that the information you're basing your decisions on, it's subjective, it's filtered, and, it's extremely difficult to account for the time factor. And what I mean by the fact that it's subjective is, do me a favor, turn your TV on right now, and take a look at what the folks over at CNBC are saying about the value of the dollar. Okay, now turn to Fox Business Channel. Chances are the analysis that you see will be completely different from what's being said on CNBC. Now, most of the time, you don't even have to change a channel to see the disparity in opinions. More often than not, you're going to see a commentator talking with two so-called experts. They each have a flashy title or they hold a top position at some think tank you've never heard of. And on one side of the table, you've got, expert Bob saying that, hey, times are good, the dollar's strong, now's the time to buy. And then 30 seconds later, on the other side of the table, expert Joe makes a credible retort for why the dollar's weak and why it's time to get short. So now you, the trader, sitting at home on your couch, you're faced with this predicament. You're watching two so-called experts with drastically different viewpoints, and you have to make a decision. Is it time to buy or is it time to sell? And so, how are you going to make that decision? Are you going to go with your gut, rely on your intuition? Maybe you choose, whatever expert's wearing the nicer suit and you go with his opinion. I don't know. There's really no smart way to make an informed, a profitable decision based on this information. And the second thing that I talked about is that this information is filtered. And what I mean by that is that, you can't just pick up your phone, dial up Ben Bernanke over at the Federal Reserve and, pick his brain about what monetary policy is going to look like in the coming months. At the very best, this information is collected from the source by a journalist or a researcher who's going to write the story within the confines of their own bias. And then the journalist is going to send it to the editor, who again is going to make changes to fit, their personal perspective or their narrative. The story's then going to be distributed throughout other channels of the news organization. By the time it gets to you, it's basically worthless. So again, with this information, how are you going to honestly expect to identify valuable trade opportunities? And then finally, traders, how are you going to account for the time factor? Let's take that previous example that, the government decides to flood the market with currency. Well, even if your analysis is spot on and the value of that currency is going to decline, well, how are you going to determine, when to take action? Is that market going to roll over tomorrow, next week, next month, 6 months from now? There's no way of telling. And this is why trading on, fundamentals is so difficult. So, Traders, if you take nothing else from this video, I want you to remember what I'm about to say, because if you understand this concept right from the start, it's going to prevent you a lot of frustration, and it's going to save you a lot of money. So basically what I'm getting at is that fundamentals are irrelevant. You know, as an independent trader, news events, interest rates, unemployment figures, all these things should have absolutely no impact on your decisions as a trader. Now, I'm not trying to say that, you know, you should completely ignore these things, because as a trader, I mean, even as an informed citizen, it's important to know how economies work. You know, it's important to understand what events move the markets. But when it comes to actually making trading decisions, when you're actually deciding when and where to place trades, fundamentals are irrelevant. So basically what I'm saying is that your success or failure as a trader is going to be a reflection of your ability to understand and employ technical analysis. So let's take a look at what technical analysis really is. Now, traders that use technical analysis, they make their trading decisions by watching price action and studying the market itself. You know, in technical analysis, all the answers can be found within the chart. You know, for technical traders, the chart is our lifeblood. It's our battlefield. We eat, sleep, we breathe the chart. We have no concern for the why. We don't care what's causing the market to move. We don't need to know what makes the market fluctuate. See, the real benefit that we talk about, you know, in our training course is that the chart is the great equalizer. Now, and what I mean by this is that all charts look the same regardless of your location. You know, the information that I see on my chart out here in, you know, the middle of the USA is the exact same information that Bill the Trader is seeing on the other side of the world. You know, no one is privileged with, you know, what you might call inside information, that you can't buy this stuff early. So you might be thinking, okay, how do we make money? Well, as technical traders, we understand that patterns repeat in all markets and across all time frames. So with the knowledge of these patterns, things like head and shoulders, support and resistance, market harmonics, AB equals CD patterns, we develop strategies to identify these occurrences, and then we use them to predict future market movements. Now, we also employ a variety of charting tools, things like Bollinger Bands, MACDs, Fibonacci's. I'm sure you're familiar with many of them, and you know, the list just goes on and on. And everything we do, every decision we make, takes place within the confines of the chart. Now, all this is, you know, it's valuable, but as, you know, educators, we understand that this knowledge isn't beneficial until you can put it into action. So, with that being said, I want to bring up a chart, and I want to show you how we use technical analysis in a practical application. So let's go ahead and bring up this chart, and here we have, let's see, we got the Euro-Yen on a 60-minute chart. And I just want to walk you through a trade and show you the value of technical analysis. Now, for all of you new traders out there, I know right now this just looks like a colorful squiggly line, but for an educated trader, one that has an education, there's some very important information to be gathered from this. Now, looking at this chart, one of the first things that I notice is a clear resistance level. And I'm going to go ahead and draw this in so you can see exactly what I'm talking about. Let's pull in this horizontal line. If we bring in that horizontal line, you can clearly see what I'm referring to. So right here you can see, over here on the left, that the market came up, they tested this level, you know, tried to push through, couldn't make it, retraced back. We came up here, tried to push through that level again, couldn't make it, retraced back. Pushed through that level again, couldn't make it. Again, came up close to that level, and then finally rolled over. But now, you see right there at that 110.75 area, that's going to be your resistance level. That is until the market finally here pushes up through that resistance level and gets what we call a break above, close above on this red candle. So now what we see is that what was once resistance now becomes support. And you can see after this break above, close above, we have another candle that comes down, tests that level, and now that level acts as support, and the market actually springboards off that level. So let's go ahead and let's walk through let's walk this market forward. Now, obviously, that's a valuable lesson right there in support and resistance, but I think we could probably find some other information in here too. So let's go ahead and take a look. So, as we walk through there, market starts to move up, moves back. You see a rally, continues higher, retraces back, rallies, retraces back, rallies again, retraces back. Now, let's go ahead and stop right there and take a look at what we're looking at. Now, it's about right here in this area that a trained trader's reticular activating system is starting to scream. Now, I know a lot of you are scratching your head right now wondering, what a reticular activating system is, and it's not a charting package indicator that comes with NinjaTrader. It's actually a term that our clients become very familiar with over the duration of our course, and it's a term that we use to describe that part of your brain that tells you what to focus on, what to pay attention to. It's like, if you consider a computer programmer, they look at a page of ones and zeros, and they see a series of commands. Whereas, a regular person would look at that and just see a bunch of ones and zeros. Well, the same thing goes for traders. An untrained eye sees this as just an up and down colorful line. But a trader who knows what to look for can see some valuable trading opportunities setting up. And so when you learn to train that reticular activating system, you begin to see the big picture. The colorful lines, they start to tell a story. So right now, looking at this chart, we can start to what we call build a case for entry. Now let me draw on some lines so you can start to visualize the market harmonics that's going on here. Let's pull in our line. Let's take it from this first rally. Now, if we pull this line over, we can see that this second rally is almost identical in size to the first rally. And if we continue forward, we see that the third rally is almost identical to the first and second rally. Well, now that's starting to show that, hey, there are patterns that happen within the market. Now, if we go the other way, if we can look at these retracements, it's reasonable to assume that if the market rallied in the same way 3 different times, then the market would retrace in the same way 3 different times. So let's go ahead and draw that in and see what we can find. Now let's take this line, what we call our ABCD pattern. Now if we come over here to the level of where this last spike high is, and we drop in that line, what we can see is that that market looks like if it follows that same pattern, it's going to retrace down into that previous support line that we identified earlier. Now this is what we would call an ABCD pattern completion. But let's go one step further. Let's pull in some more technical analysis. Let's bring in our Fibonacci extension tool. We'll go to our previous swing high, down low, and back up. And right there at that level where that ABCD comes in, right between that 127 extension and that previous structure support, you see that's where it completes. Now this is just more value to our building our case for entry. This is just telling us as a trained trader that a trading opportunity might be coming up. So let's go ahead, let's follow the market forward and see what would happen. So we can see here the market kind of moves back, and then all of a sudden, boom, there it is, rolls over. You get an ABCD pattern completion at the 127 extension ratio confluence, at previous structure, and if we look down here in the bottom right, we can see that the RSI is overbought. So we have all these technical indicators that are telling us that, hey, the market's probably going to reverse. This might be a good time to get long. So if we enter the market at that 127 extension, we follow the market forward, and there you have it. We're clearly in the money. Now, I know we covered a lot of information here, and I don't expect you to, understand all of this, but what I do want you to retain from this video, if you retain nothing else, I want you to remember that at no point during this trade did I mention fundamental analysis. I never said, okay, traders, now that we've identified our ABCD pattern, let's cross-reference that with the latest GDP figures and make sure that our analysis is congruent. This shows you that just knowing some basic patterns, understanding basic technical analysis, you can identify profitable trading opportunities. So traders, as you move forward in your trading career, I would encourage you to remain focused on what's important. Don't listen to the pundits on the news networks. Their job is to stir up controversy and debate, not provide you with valuable trading tips. So, if you concentrate your efforts on learning technical analysis, then trust me, if you do that, your account balance will be happy that you did. So, traders, that covers it for today's lesson. I want to thank you for joining us. I'm Darren Oglesby, and we'll see you next time.